Hello, trading is closed on the 2nd of August, 2023. Our disclaimer always comes first. It's my trading plan for tomorrow, August 3rd. Remember, my calls can be wrong. Trade at your own risk. I was out for most of the day today. I hope to have more time to look at the market tomorrow, but let's share what I came up with. Today's pattern had the early low and so will tomorrow's. We said yesterday that if we could hold on to this price at the close, we should trade higher, but if we gap down smartly, that was off the table. And we said since futures are already down smartly, that was entirely possible that we gap down and kill the call. That's what happened. Let's go back. Well, let's first see what MEJT did. We got an ultimate sell signal in the afternoon. Here's the minimum. We undercut that. We don't have to do any more. All these moves were false. We've already retraced, so nothing more from that. This is a pattern which usually closes near the high. If it doesn't close near the high, it's negative and should lead to lower prices. Early weakness should lead to lower prices, so that's all bad. What's positive is that we gapped down, hit lower lows, closed over all the lows. So those signals conflict, and the commonest thing when you get conflicting signals is to gap and promptly move outside the day's range. It's not the only thing. You can also close unchanged, have the big move the next day, and of course, sometimes neither of those things happen. Let's come back here. This was a big reversal bar last week. We said all we needed was follow through to take us to our lower targets just north of 4,500 cash because of the Fed whipsaw. All we needed was confirmation by trading under this close by 1 cent. Well, not only didn't we do that, we had this big gap up over the MC announcement price. As long as you're over that price, that lower target's off the table. And then I think if we overtake this high, we forget about it altogether. Nothing works every time. But now we're back under that price again. We traded 52 handles over the announcement price. So ideally, now that we're under this line, as long as we stay under it, we should trade at least 52 handles under that price, which is 45.03, and you don't have to stop there. That's just a minimum price target. We trade meaningfully over this line, we forget about that. We still stopped right at this trend line, but that's not the only trend line in play here. Here's a daily chart. You forget about this spike low, connect these lows. You see we've dropped right down to that trend line, but not through it. And when you have a trend line like this, either you gap under the line or the line wins. So either we gap under this line, which means essentially under today's low, to continue the drop, or if we don't, then move under that line should retrace at some time. Here are the rules. Tomorrow's pattern has really low. It could still gap up. Signals are mixed. It's positive. We gap down, hit a lower low, closed over the lows. Negative. Today was bearish instead of bullish. We dropped to a major trend line without going through it. If we're going to continue the decline on a beta, we should gap under the line. Otherwise, any move under that line should retrace. The FOMC whipsaw says we should trade at least just over 4,500 cash, and that's not a stop and reverse. It's just a minimum target. There are some signs the decline here won't last all that long. Futures had a volume spike, and VIX traded well over its Bollinger Band. These aren't strong enough signals yet to say the drop's over. None of them prevents the decline from continuing meaningfully in terms of price. but they're the first steps implying that before long any losses should be recovered. Doesn't mean the losses will be small, just that they'll be recovered. So we're back under this line. If we gap under this, we're going to at least 4,500-ish. So MEJT target 44.95.81, support under the target. It's a pattern with the early low, and that's today's call.